Hi, Andrew. Happy Diwali.
Happy Diwali to you and the team and all your viewers.
We're so excited to be talking to you today. Just to start the conversation, I know we've talked often in the last year or the last few months. How are you feeling this evening? Are you feeling optimistic? Are you feeling the new year is going to bring bulls, investors, lots of prosperity, happiness, joy, from a market's perspective?
Well, I certainly hope it does, but I'm not feeling that joy at the moment. The earnings season, which we talked about, up until the run up to the earnings season, has been dismal, and that's a conservative way of looking at it. Revenue growth is not really picking up, but the big key is the margins, and the margins are under pressure. So you've had this great run over the last few years where both revenue and in particular margins were all expanding, and now you're seeing the opposite of that. So with valuations where you are, there's no room for slippage, and I'm not getting a good sense across the board, across most sectors, that things are going to really pick up in the second half of this year. So at best, I think earnings going into next year, at best I can see maybe 10% earnings growth, and that's probably where if the market was to move up from here, that's probably all I'd give it at the moment in terms of a potential rise. But there's so many headwinds out there, in terms of the US elections, former President Trump gets in, what that means, and obviously the geopolitical situation. So, there's many factors out there which could also, from a global perspective, unnerve our markets. But I think in particular, the earnings season has been very poor.
Absolutely. Having said that, though, Andrew, I don't know if it's all gloom and doom to that extent. Kush Bora is joining us in the studios. Very happy Diwali to you, Kush. Great to see you here on the Muhurat Trading Special and to have you here. We're also joined by Rahul Arora this evening. Rahul, very happy Diwali to you. Just a mood check. It's a tough time in the market right now, but the other consensus seems to be that this is the kind of profit booking and a bit of correction that we needed, that we were waiting for.
Good evening, Tamanna. To you, Samina, Neeraj Bhai, and the entire team and all your families, wish you all a very happy Diwali and a very prosperous new year as we look ahead to the next 1 year. Yes, I think you're absolutely right, Tamanna. I think it was way overdue. I think you pretty much had a one-way rally from 7,500 to 26,500. More welcome, and I think prices are now starting to look a little more reasonable. I think the only disconcerting part, Tamanna, as Andrew was very rightly saying, is this has probably been the worst earnings season in a very, very long time. I think, so the move to that extent has been soured. I think people are going to be very surprised at the end of this earnings season with the extent of the downgrades that have come in. But I think at some level, we should be thankful that it has happened, because prices, like I said, had become very unreasonable to justify. But there is no need to dampen the mood. I think it's just a step back, and let's enjoy the moment.
I think, okay, sounds of caution, and maybe that is also warranted, because you should effectively say it is for what it is. But Andrew, Kush, Rahul, thank you so much, all of you, for joining in, and happy Diwali from my end as well to all of you. Kush, do you reckon that the near term has challenges? Do the charts show that? Or would you use dips to buy tactically or for the positional trade?
So first up, a very happy Diwali. Just a quick question. Is this the last day we're going to be doing this traditional where...
Yeah, we're done now.
Oh, really? Back to the mundane Western outfits, is it?
But you can always come back on Monday also in your kurta, Kush. Nothing is stopping anyone.
No, but I think, ladies, you've saved the best for the last. Absolutely stunning you're looking. Neeraj, as usual, the gentleman that you are.
What does that mean again? As usual, a gentleman. We can compliment
means
him.
he's not stunning.
I think, yeah, that's all we mean.
I think he takes being a gentleman as the biggest compliment.
Inner beauty types, huh?
It's difficult to beat the two of them today, so let's just go ahead. Yeah.
So, as much as I want to sound off, like a very optimistic tone here, I think I'll have to concur with the other two guests here. You could perhaps buy on declines, and if you're really doing that, it's not a bad idea. See, we were all talking about the dip, when it'll come about, and we always talk about the buy on dips, strategy. This is where you start accumulating but I don't think we've seen the end of it. Now, if I have to put any kind of a positive tone to it, like I mentioned yesterday in the closing show, is that, or rather the opening show, is that just look at this as the sale that you're getting in the markets. I know a lot of us would have expected or wanted it to be on the higher side, but let's just expect it, or count this as the much needed sale that we were looking for in the market, and you're getting to buy a whole lot of stocks cheaper. But I think from a near-term perspective, this pain could continue on the Nifty. We've had 2 days of consolidation at best. And beyond that, the markets have actually been correcting, and on the back of fairly decent volumes. Even the rise on a lot of stocks hasn't really been as volume backed. So I think there's some more downside left. Yesterday I put a number to it, which is 22,500. That's a meaningful support zone. If the markets were to slide, you could see Nifty head to that level. But even if that's not the case, you could perhaps consolidate with some negative bias for the course of at least a few weeks or month or two, perhaps.
I think another 7-8% correction from here cannot be ruled out on the
What
index.
surprises me is the tone, or rather the idea of this question, because when we were going up, we had the same surprise on the way up. Why not on the way down?
You're right.
Not that I'm gunning for it, but it could well happen. We've not seen a meaningful correction in the last 4 years.
Yeah, Rahul, you want to come in on this one? At the start of this week, I still remember on Monday, when it felt like there was some buying coming in, technical analysts would believe that was a dead cat bounce. But there were a few analysts, fundamental analysts too, who believed that, maybe now is a good time, we're done with the correction, back in business, time to go out and shop. Seemed a little far-fetched, to be honest, to me on Monday. And I feel like even now as we look at it, do you feel better opportunity to buy will come, or is it time to start allocating incremental capital in this market?
So I think, Samina, the right way to look at it is what kind of realistic return expectations you can expect from the headline index over the next 1 year. And I think that's probably, going to be the key determinant of any investment decision that you make when you compare it to other asset classes like fixed deposits, real estate, gold, etc. My sense is that we are at a pivot point around 24,000 on the Nifty. And, none of us have seen a boring market for a very long time. My sense is the next 1 year could be very boring. I think you could probably land up in a slightly longish range of 22 to 26,000 on the Nifty, which is why I said you're pretty much at a pivot point at 24. As Andrew was rightly highlighting earlier, there's a very important global event next week in terms of the US elections. But I go back to the earlier point I was making, Samina. I think the most disconcerting part has been the earnings season this time. And I think, we still have 15 days of results left. We don't know how bad it's going to be from here on because there are not too many green shoots emerging. In India, inflation itself, it remains a big question mark. Do we even need to cut rates? I think, people were anticipating a rate cut by October, but it doesn't look like it's going to happen this calendar year, let alone this fiscal year. So I think it's going to be a very boring market. It's going to be a very stock-specific market. Yes, there is certainly some pockets where value has started emerging, no question. But I think to be expecting anything more than a 10 to 15% return over the next 1 year in this earnings backdrop is highly unrealistic, in my opinion.
Andrew, what can change this? I mean, 2 months, we have a quarter which is bad. Some optimists argue that the government spending hasn't happened and that has had an impact. Once the government spending comes back, and people believe it will, there will be a bit of a recovery. So maybe Q3 also is a bit of a quiet one, but then things may turn around because we're still a growth economy and a growing economy. So what turns this around? Is it a correction to maybe 24 or 23,500 or 23,000, or is it something else?
So Niraj, it's an easy one to answer in the respect of that. I'm not sure what can turn the market around, and I'll tell you for why. Is that all the factors, and Rahul mentioned them as well. Is that we're all expecting interest rates to come down. That doesn't look as though it's going to happen now. I mean, I've been the most optimistic on this, and I just don't see it happening in the next quarter. So there's no respite for the banks, and that's one of your biggest kind of weightages in the index. So there's going to be no earnings upgrades, no thinking about earnings upgrades for the banking sector. If former President Trump gets in, then there's going to be huge worries about the tariffs that could possibly come into the IT sector and pharmaceutical as well. So 2 places to hide have just disappeared, and your third, the banking sector. So 5% from here downwards is an easy thing to think of. And then unless the government does start spending, which is going to be probably very late on in the year. There's no multiplier effect. It all comes into 2025. And the world could be looking a lot different than then. China is looking more resilient now after the stimulus packages. There's more to come. So I don't see FIIs rushing to India, even though you've seen some, fall in the market. It's just not big enough to get that valuation to such a point where you say, yep, this market's good and it's cheap and we know earnings are going to pick up. So I'm not sure there's anything in the very short term, Niraj, which can turn the sentiment around.
First, pre-open rates hitting for the Diwali Muhurat trading session in another 30 seconds. They are not going to have great volumes. I mean, volumes have been petering off for the last week or so. Even if you look at the FII flows from yesterday, still about 5,000 odd crores of sales, 3,000 odd crores of buys from DIIs. That remains consistent, and you could probably see that in the next few weeks as well. But the biggest question really is that what is the kind of position you need to take in the market right now? And Kush, let me come to that. Will we be looking back at this period in another 2 to 3 weeks and some people thinking that I missed the bus?
So if we expand the time horizon to, let's say, perhaps 4 to 6 months, that's my sense right now, then my answer would be yes. Given the kind of ferocity with which we've been selling, and we've not seen that abate at all. Maybe we can argue that yes, the FII selling number has gone down from what it was at the start of the month and all that. But let's not forget there was the monthly expiry also at play. So those technical factors also come in. So I'd want to see up until the US elections are over, maybe a couple of days thereafter, how do things shape up? So not 2 weeks, perhaps 2 to 3 weeks might probably be a little early, but give it a quarter, maybe a little longer, then yes, this is perhaps one step where you could at least start buying whatever you wanted to. Now, a couple of stocks that have been on my radar, I know we've discussed them a couple of times already. One of them is Skipper India. Phenomenal run over the last 2.5 years. It's been a multi-bagger from 50 to 500 plus kind of levels. Hasn't really seen a meaningful correction. Earlier, it wasn't really a stock which had all that great participation in volume, but on the way up, post that 300, 350 mark, the volume has also gone up. So I think this momentum could continue from a Samvat to Samvat perspective also, for a year's perspective also. You could keep Skipper on your radar, but from a near-term perspective as well. The stock's not broken its 20-day moving average, and I've been talking about the comeback of, or the sort of comeback of, the railway stocks now, because the volumes on the way down are thinning, and we've already seen some traction in a couple of names. So RVNL is one stock that I have on my radar from, again, a year's perspective, but from a near-term trading bounce perspective also. So Skipper and RVNL are two stocks that I'll keep on my radar.
So you'd buy Skipper today in 15 minutes? Muhurat trade would be of the day would be Skipper?
Oh yes, the Muhurat trading pick for today would be Skipper.
Rahul, I'd like to come to you. What is it that in this cautious stance that you have right now, and arguably correctly so, what is it that you find favor with as a house? Where is it that you guys have told people to go out and make investment calls, not necessarily from a Samvat to Samvat perspective though?
So I think, Neeraj, it's very bottom up. I don't think there's a top-down sector call, across the board. Let me throw some names at you, maybe for the benefit of your viewers. I think if you look at IT services, Neeraj, valuations are getting a bit on the higher side. I think large cap names have approached about 30 times. But there, I think if you look at a name like LTIM, looks interesting to us from a growth and a margin expansion standpoint. If you look at BFSI, Neeraj, I think there is a lot of value that is still there in some of these housing finance names. So names like PNB Housing, Repco, Housing Urban Development Corporation, not names that we often discuss, but I think some value is emerging there. We've seen the insurance companies report very good numbers. So, you could still look at something like an ICICI Pru Life insurance. I think in chemicals as well, Neeraj, I think there is some value emerging. We like the oleochemical space. So you could look at names like Galaxy Surfactants and Fine Organics. I think even Naveen Fluorine's had an interesting correction. You've had a bit of a correction in durables and electricals as well. Names like Crompton Consumer, Blue Star are starting to look a little interesting at these prices. Cement has been a washout quarter, Neeraj. A lot of the mid and small cap names have reported losses, but I think we could start nibbling into something like a JK Lakshmi Cement. I think defense, your colleague was talking about, some of a correction because the valuations, we had downgraded the sector some time back. I still don't think valuations are reasonable yet. But I think some names like Hindustan Aeronautics and DEML. So I think, I mean, I'm giving you about 10, 12 ideas. You could probably look at some of these. So the point being here, Neeraj, it's very stock specific. I don't think we can take an aggregate sort of top-down view per se. But I just like to briefly comment on, another sector that your colleague recently raised, which was luxury. That sector is showing no signs of slowing down. So, we do like names in consumer discretionary as well, like a Chalet Hotels from the hotel space, United Spirits and Westlife from the QSR space. So some of these, unfortunately, okay, Neeraj, let me give you a line that I actually heard recently from a global investor, and this is just stuck in my mind and it doesn't go away. He says that a 50p stock with growth is actually cheaper than a 15p stock without growth. And I think that's what's happening with a lot of consumer discretionary stocks that we're seeing right now. So I've given you about 12 or 15 names, but I think these are some of the stocks that are looking interesting, where we're confident of top line margin and bottom line growth, and valuations are not excessive, but it has to be bottom up on a case to case basis. I think it's very difficult to take an absolute sector top down view right now, Neeraj.
Quick word before we let you go, and Andrew, I'll come to you first. I'm obviously happy Diwali as always, and you sounded cautious, understandably, at the start of our conversation here today. But what is the one or two, or what are the one or two ideas that you think are worth looking at very, very closely right now, even as these concerns mount over consumption, etc.?
So I think, Samantha, it's the same themes. I'm not moving away from the themes that we like, which is being premiumization in the alcohol and non-alcohol businesses, hospitality through airlines and hotels as experiences increase. Defense and renewables remain a long-term story, and electronic manufacturing sector. So those are the themes that aren't going to play away. I just feel that the next 2 months sitting on a bit of cash, because it's going to be more of a trading market, in my view, where you're going to get whipsawed around quite a bit. It's just probably a nice, safe place to be and just let the dust settle over a number of events which are coming. It's not just the US elections. We've got the Federal Reserve as well in a week or so's time. And of course, then we'll have the RBI. And whatever sanctions or whatever regulations they're going to put on again onto the industry. So I think those are the three things which kind of worry me in the very short term. So yes, the things will play out over a longer period, but I don't need to rush in. I can continue to pick my stocks within those sectors as the market kind of takes that broad brush and hits the whole of the markets in the next 2-3 weeks.
Now, very, very happy Diwali to you. Have a pleasant evening and, of course, a great year ahead.